Hi, good afternoon, everyone, and thank you for joining us in this earnings call. Today, we have with us executives from a company that is very dear to our hearts here in AB Capital, as we were once part of this group. I'm talking about no other than Phinma Corporation, a conglomerate that operates from a three-tier bottom line perspective of benefiting people, planet, and profit. As disclosed to the exchange earlier this month, Phinma had a banner year in 2021, and we are very excited to hear today how they achieved this in the midst of a very challenging environment and whether this performance is sustainable. So those of you who read research reports on a regular basis will note that there's no broker currently covering the Phinma Group. This is something that we hope to change when we pick up coverage going forward. One thing that can be readily verified today, however, is that the company's market cap stands at just 5 billion pesos, even as the group reported over 1 billion pesos in earnings last year. So obviously, there's a lot of very exciting things to discuss with Phinma today. So without further ado, let me introduce to you our speakers, Mr. Ramon R. Del Rosario, Chairman and CEO, Mr. Chito B. Salazar, President and COO, Mr. Pythagoras L. Brion Jr., EVP and Group CFO, Mr. Eduardo Sahagun, EVP and Head of Construction Materials, Mr. Rafael B. Felix, SVP and Head of Properties, Mr. Jose Marie Del Rosario, SVP and Head of Hospitality. So I will now turn you over to Mr. Ramon Del Rosario for the opening remarks.
Thank you. Good afternoon, everyone. Thank you for joining us today for Phinma Corporation's earnings call, where I will be joined by our top management in going over our very strong 2021 financial and operating results. Allow me to start by acknowledging that the last 2 years have been very difficult for business, throwing unprecedented challenges in front of us. As a business group, Phinma has responded by continuing to innovate in how we operate and provide critical goods and services to our stakeholders. These challenges have also caused us to double down on our mission to build a better normal so that all may have access to the essentials of a dignified life. Indeed, the role of the private sector in uplifting social well-being has, to our minds, never been clearer, especially in the businesses that we operate in: education, construction materials, properties, and hospitality. In education, as Chito Salazar will further explain, Phinma Education Holdings owns and operates what is now the largest private network of accessible, high-quality educational institutions in the Philippines. Our schools, by both intent and design, target those with the greatest need for education by providing them with the skills, confidence, and credentials to attain gainful employment. Phinma Education has a strong track record of successful acquisitions and operational turnarounds, offering very attractive returns to shareholders. We remain optimistic in the growth prospects of this business because of the great need for our brand of education, both domestically and now in countries like Indonesia. Our construction materials group, headed by Ed Sahagun, leverages Phinma's extensive experience in this industry, especially as we foresee a rebound in Philippine construction activities. We believe that we have the largest and most diversified distribution network that extends nationwide. This allows us to achieve significant efficiencies and, more importantly, ensure supply where there is a need. For example, we are proud of how, after Typhoon Odette, the Phinma Group was able to quickly ensure an adequate supply of materials to affected areas at pre-typhoon prices. Our construction materials group also maximizes the synergies of our one-stop shop of steel products, cement, and solar energy solutions. It has seen rapid growth since 2019, especially with our re-entry into cement. Owning property is a basic need for Filipinos. And at Phinma Properties, as Pete Felix will describe, we are embracing the vision of building sustainable communities. Phinma Properties has demonstrated improving profitability, successfully navigating various challenges brought about by the pandemic. They have also begun expanding into emerging cities as we are optimistic about the growth prospects of the entire nation. Phinma Corporation is also invested in hospitality with investments in 2 hotels in the Mall of Asia complex. Jose Mari del Rosario will tell us how this business, despite being one of the hardest hit industries by the pandemic, managed to grow occupancy and sustain positive cash generation. We are beginning to see signs of tourism recovery and expect to benefit from revenge travel in the coming years. We must do good while doing well, because that is what sustains our efforts. Phinma takes our mission of making lives better very seriously, and this has been the guiding principle behind our portfolio approach to address the great social inequities. This goes hand in hand with our efforts to provide value to our shareholders, as 2021 marked our strongest financial performance since 2004, with consolidated revenues of 16 billion pesos and a consolidated net income of 1.8 billion pesos. We are pleased that investors also recognize our mission orientation and our financial performance by investing in Phinma, as our share price more than doubled in 2021. Thank you, and may we have a productive afternoon.
Good afternoon. Let me introduce to you and discuss the results of Phinma Education in the past year. From the very start in 2004, Phinma Education, by intent and design, really sought to serve the lower income students in order to enable them to access quality higher education, which has before that was very not accessible to this market, and as a result achieve gainful employment and improve their lives. For many of these students, for many of these families and these students, their goal really is to get a good job in order that they can help their families, build a home, provide a sari-sari store, or buy a tricycle for their father. Because most of our students really are the children of farmers, public utility drivers, urban wage income workers, market vendors. This is the market that Phinma Education has chosen to serve and continues to serve. This is really a huge market in the Philippines that has really gone underserved. The Philippines only has a gross enrollment rate, meaning of the children who are meant to be age group that's meant to be in college, only about 35% are actually enrolled in tertiary education. And many of the lower income markets of D&E really do not have the capability to enroll. And so this is the market Phinma Education really has chosen to serve. And to provide them a pathway towards better employment and better income to make their lives better. But the challenge for this market is twofold. The first challenge really is, how do we make education accessible to this market? Education, traditionally, higher quality education, traditionally is expensive in this country or very limited even internationally. However, we work very hard reducing our costs, changing our systems in order to bring down the cost of education such that our tuition fees are on average about $300 a semester. That's only about 15,000 pesos a sem, or 30,000 pesos a year, which means that for a full year of college, for a full university education and diploma, a family only spends about 120,000, or for a traditional 4-year program. That's 120,000, which for many of our elite schools today is equal to only one semester of studies. Now, beyond just making our schools more affordable, an even greater challenge was, how do we address this issue? Because we are non-selective and because we are open admission, how do we address the issue that the quality of students coming through our system really come to us with only a grade 4 reading and math competency? I think for us, this was actually the bigger challenge. If we wanted to serve this market, it wasn't enough that we made it affordable, but we had to make it effective given the reality that the background, the basic education they were getting was more often than not, did not prepare them for the competencies they needed to succeed in a college education. As such, we had to redesign our curriculum. We had to adjust, retrain our faculty, and we had to rebuild our systems in order to provide the kind of education that these kids could afford and these kids needed. As a result of these efforts, we've actually brought up the qualitative education of the institutions we purchased. We actually are now hovering at about an 85% licensure exam results. When you think about 85%, given that for some of our schools, they were hovering at 0 to 5% board passing rates when we bought them, to bring them up to 85%. And given the levels of reading and math competency our kids come to us with, this is something that we're very proud of, that we managed to get them there. But more importantly, we actually have an employment rate of about 82% after about 1 year in college, such that we actually measure even our payback. Payback is how much the tuition fees cost relative to the income that they get paid after college. And our average payback period is only about 7 to 12 months, when actually the gold standard globally is about 18 to 36 months. So our kids actually managed to pay back for their education in about a year, while graduates of other institutions actually take about 2 to 3 years in order to recover their investment in education. As a result of this, we've managed to grow our network into 9 main schools and about 14 different campuses throughout the country. And also we have grown to about 94,000 students. We are now, as Mr. De Rosario mentioned, the largest network of higher education institutions in this country. We're even larger than the UP system and larger than other private institution systems. We continue to remain optimistic about the future. If you can go to the next slide, please. And we believe very simply that there's still so many students there that we need to continue to serve. There's still many more students that need access to quality education, who need an opportunity to make their lives better. You know, our kids, 65% of our kids actually come from the D and E markets. The D and E is really the lowest 2 income brackets of this country. And there are many, many more in this country that we continue to serve, and actually many more also globally that we wish to serve. So we're actually optimistic there is still lots of room for growth. Growth not just of our existing schools, but we want to expand even into new markets. We've actually entered 2 new markets in the past few years. That would be the large NCR market and the large Laguna market. We actually purchased a Laguna school in 2021. That was our most recent purchase. And we continue to expand these schools. We continue to look for more schools to purchase in new markets and in other areas. And we believe that we can aggressively also expand into the international market as well. And for us, Indonesia is actually our most exciting new prospect today, as we do have a small school in Indonesia. We started operating the school in 2019, and we think that there's even larger opportunities there, as the gross enrollment rates are about the same as the Philippines, but the population is actually double. So there's a lot of potential in Indonesia as well. As a result of all of these efforts, actually, the funny thing is, during the pandemic, at a time when it was even more difficult to study, and where the challenges to reach our students were even greater, because of the intimate knowledge we have of our market, we managed to switch our systems in order to continue to offer education in a remote fashion, in a remote and distance. So even if our kids could not go to school, we were able to continue the education. As a result, we actually saw our largest growth rates during the pandemic, growing at our enrollment grew by about 30%, and our freshman growth actually increased by about 50% during the pandemic. And looking forward to 22-23, all indications show that we'll be able to continue this growth rates into 2023. So, given the needs of this country, the continuing size of the underserved market, our ability to really cater to the needs and the different challenges that this market face, and the large underserved market even outside the Philippines, we continue to believe that there's still a lot of potential for growth for Phinma education. Thank you, and good afternoon.
Good afternoon. I'll be talking about the construction materials group. So, construction industry grew by 9.8% with the easing of economic restriction and recovery of both public and private construction last year. This is much anticipated development but industry has yet to return to pre-pandemic levels. Construction recovery hampered by prolonged pandemic effects and supply chain disruptions. Despite these challenges, Phinma CMG grew its top line by 20% and generated consolidated EBITDA of 1.6 billion pesos. Maybe the question that you have is that how did you do this? It's pandemic, it's supply chain disruption, and so on. Number one is the synergy among the companies, from building foundation to roofing to solar, rooftop solar. So what are other synergies that you can see apart from those customers that buy cement will also buy steel, will also buy rooftop solar. So geographically, we cover the entire country from north to south, whether it is solar, whether it is steel, and whether it is cement. Costs, the three companies are shared and service by a shared service. So as far as cost is concerned, especially administrative cost, this is very much well managed. Our utmost commitment to high quality standard for all our products and services. When we talk about union, whether it's steel, cement, and rooftop solar, you can be assured of higher quality. And we always position ourselves that way. And that's why you can see that when we make an offering, especially for our cement now, it is accepted by customers that we are offering our cement at high quality and at a premium price. We have also large and well-established distribution network, whether it's retailer, wholesaler, what have you, and we are serving them direct contractors and so on. But we're also one that have access to sea and overland transport, especially for cement, where no other players in Luzon will have the same capability. We have strong partnership with our suppliers abroad, Vietnam or Japan or China, like Sinotrans in China, one of the biggest shipping companies. We managed to alleviate the issue on supply chain by having this partnership with them over long term rather than on a spot basis. We have the best-in-class technology, automated state-of-the-art equipment, cost management initiative to efficiencies and overall operational excellence. Our plant, particularly the Maribeles plant, is highly automated, run by 60 people 24/7. And if you compare other integrated plant, you will probably need more than 200 people to run it 24/7. And most importantly, people armed with decades of technical and management expertise. During the pandemic, because of our safety protocol and our care for people, we managed to motivate our people to go around the marketplace, sell and collecting for the company. So we have actually good collection experiences among the three companies that we have. Amid cost pressure, CMG, we rationalize our costs, improve our productivity, started local production of cement, which is our union extra strength, establish long-term partnership, and stabilize costs. And during this pandemic, Phinma Solar made laudable turnaround, which is growing into residential segment of the market. Maybe the other question is how we will do it in 2022. Again, we will continue to manage our costs and improve our performance through leveraging on the synergies that we mentioned. We have to optimize our network. We have to improve our unloading and loading capabilities, fully utilizing available capacities. In fact, our Maribeles plant is now on its way to expanding at least 50% of its capacity and upgrading all our equipment in the plant, whether it is steel or cement. We also develop growth markets for Phinma Solar and also our steel business by making light metal frame. Because as you know, there are no more lumbers available, so light metal frames is now being used, and also the insulated panels that we also have as a business, as a separate division, so that enough focus can be done on these two potential growth areas for our steel business. Backed by a leaner and more agile organization, our digitalization efforts and continued implementation of our health and safety protocol will bring growth in 2022 this year. Thank you very much at maraming salamat sa inyo.
Good afternoon, ladies and gentlemen. Phinma Properties is committed to its shared vision of making lives better by creating sustainable communities for middle-income families. We have over 25 projects which have served over 16,000 families. 2021 was a good year for us. From a strategic point of view, we have been moving from our bread and butter of medium-rise buildings in the National Capital Region towards horizontal developments in emerging cities. This is also in line with our strategic priorities to address demand, improve profit margins while keeping a tight watch on our cash conversion cycle. Our campaign for 2021 was Choose Home, Choose Hope. And we coupled it with operational efficiencies, which have allowed us to sell out Aretso Place Pasig and Hacienda Balay Quezon City during the height of the pandemic. Early this year, we launched our Metrotown project in Las Piñas and our Phinma Maayo San Jose in Batangas, while down to our last 45 units out of the 1,080 units in our Aretso Place Davao project. On construction, we had no major disruptions, and we employed operational efficiencies that made us realize savings to our cost of goods, which helped drive up our gross profit. On improving our cash conversion cycle, we were recognized by Pag-ibig as the top 9 developer in the National Capital Region out of 110 developers. This is our third straight year of achieving this top 10 award. For the first time, we landed as the top 6 developer of Pag-ibig in Mindanao out of 78 developers. Robust demand for housing in our market segment and our focus on controlling our construction costs allowed us to enjoy a healthy gross profit margin of 53% in 2021. For Q1 2022, we have been outstripping our projections and competitions where we are present. We have sold out Building 1 out of 2 buildings that we have in Uniplace at SWU Village, Cebu. And due to its success, the second building in Cebu is already being executed. Moving forward, we are geared towards emerging and new wave cities such as Bacolod to bring townships to middle-income families, and also to utilize Phinma's assets with other SBUs, particularly in Cebu and La Union. Later this year, we will launch Phinma Maayo Tugbok in Davao to serve another 622 families, and by year end, another 2 buildings in our Solano Hills Sukat to serve 253 families. We decided mid-2021 that we have to be more than a home builder. We chose to incorporate more sustainability features into our communities, actually living out a code from which we define our new identity. Apart from our ongoing quest into middle-income townships, we purposefully chose to incorporate green architecture, develop ergonomically designed homes, and get all our projects EDGE certified. All these provide the essentials to make lives better by creating sustainable communities for Filipino families, and that is how we will continue to add value to Phinma's mission and growth. Thank you very much.
Good afternoon. I'm Mari Del Rosario. I head the hospitality group within the Phinma Group. The Phinma Hospitality Microtel Hotels, we have the master franchise for the Philippines of Microtel by Wyndham and Trip by Wyndham. Wyndham Group is the largest franchisor in the world with familiar brands like Days Inn, Ramada, and now La Quinta. But for the Philippines, we are just concentrating with Microtel and Trip. Here in the Philippines, we have been able to put up 14 hotels. Baguio, North Luzon, 3 in Central Luzon, 3 in South Luzon. In Mindanao, we have Davao and Gensan, and 2 resorts, and as well as 3 Microtel hotels here in the NCR. Our business model is through the franchise model. However, we retain management of all of the properties that we operate in. In so doing, we have been able to forge partnerships with strategically located locations, as mentioned earlier, through joint venture arrangements that we have over the years in varying capacities, either as 50-50 ventures or as minority partners. In half of the locations where we are, these are full franchise arrangements. As was mentioned earlier, the hospitality industry was hit very badly during the past 2 years. However, we have been able to sustain and be able to open all of our, remain open in all of our properties despite the difficulties. The pandemic hit us, however, due to tight management and cost control, we were able to survive. We are looking at as they say, the light at the end of the tunnel, because we've seen that the revenge travel has set in, and we have seen a robust growth of the domestic tourism. Of course, we are very much dependent on the airline industry as they revive. So we are very much in sync with the airline industry as we see a resurgence of flights recovery into the key cities and key regions in the Philippines. So in moving forward, we continue to be on the lookout for franchise opportunities or joint venture opportunities all over the Philippines. However, we are exploring other models of ownership, such as the Condotel formula. So please, we invite you to get out there and rediscover our beautiful country, either being as our guest or maybe even as a franchisee in one of the locations that we are looking for to continue to grow the Market Trail and the Trip brand. Thank you very much.
Good afternoon. Allow me to present to you the financial performance of Phinma Corporation in calendar year 2021. Revenues reached a total of 16 billion pesos, up 30% year-on-year. This came from 3.7 billion from the education business and 12.1 billion pesos from the construction materials business. Both businesses have been improving in terms of its growth rate over the past 3 years. The education business has shown an 8% 3-year compounded annual growth rate, and the construction materials business 14% in 3 years compounded annual growth rate. In terms of income, as you will see in the next slide, total income reached 1.87 billion pesos, of which 1.12 billion pesos is income attributable to shareholders. Of this income, 563.3 million came from the education business and 614 million from the construction materials business. Both earnings have been growing on a 3-year compounded annual growth rate basis. For the education business at 35% per annum for the past 3 years, and the construction materials business at 27% for the past 3 years. Next slide, please, will show the earnings per share. Earnings per share has grown to 4 pesos and 12 centavos per share. This is 6.5 times bigger than the 2020 earnings per share. And the market has recognized this, doubling the price of Phinma Corp stock from 10 pesos in 2020 to 2015 at the end of 2021. On financial position, we have maintained a strong financial position. Total assets reached 30.1 billion pesos, up 23% from 24.5 billion in 2020. Increases in assets came from the increase in working capital assets from the 1.2 billion Mariveles Terminal Port that serves the cement plant and the infusion of $50 million in Songlam Cement. Songlam Cement is the largest private cement manufacturing company in Vietnam. And Songlam provides the manufacturing leg for our cement business. Our liquidity remains very good. We have maintained cash of 5 billion pesos, and we cut our short-term indebtedness and issued 3 billion worth of 3-year bonds, which bonds were oversubscribed by over 9 times. This has given us an improvement in our liquidity to 1.7, up from 1.5 in 2020, while modestly raising our DE to 2:1. All these improvements in revenues and earnings have been a result of a total of 5.9 billion of capex spending that we have started from 2018 to 2021. At the end of 2021, total equity stood at 9.9 billion pesos, of which 7.5 billion is attributable to shareholders of the parent company. This is equivalent to a book value per share of 27 pesos and 46 centavos. As you may remember, last April 6, we paid 50 centavos per share in dividends. The company has paid dividends continuously for the past 14 years. Looking forward, the last slide, Phinma is well positioned for growth and will continue to invest in the growth of its various businesses. The economic recovery, which is estimated to go up by about 6%, and the large amount of budget provided for the infrastructure space bodes very well for our construction materials business. And as Chito has described the education profile of this country, only 1 out of 3 of Filipinos are able to get to college. There are millions more that can be served by Phinma Education. In housing, as has been indicated, PPHC Phinma Properties has started to develop properties in outside of Manila. They are currently in Batangas, Cebu, and Davao, and are looking at possibly La Union and Bacolod for more developments in those areas. And in the hospitality space, the expected revenge travel has become apparent starting this past April, where you have during the Lenten holidays, when you see a lot of domestic travel happening, airports being full. Of course, there are challenges. There are rising costs. There are rising interest rates that are about to happen, and there's competition that is emerging. However, this group has been in business for 60 or 65 years in the Philippines, and we are confident that we will be able to do well even as we continue to do good by making lives better for the Filipino people. May I turn over the mic, so to speak, to the AB Capital anchors?
Thank you very much for your comprehensive presentation, gentlemen. And again, congratulations on your banner year. Personally, I've always thought that Finma is one of the most underappreciated conglomerates that's listed. But today we have more than 100 people watching us on Zoom and on Facebook Live. So it looks like more people are taking a closer look at Finma. Speaking of which, I'm sure our audience have a lot of questions. So we will now open the floor to questions. If you have any, you feel free to type it in the chat box and I will read it. But in the meantime, I will be reading some of the advanced questions from our audience. Okay, so first off, how do you see your sales and earnings contribution mix for 2022 and moving forward? And what do you forecast to be your growth drivers for this year?
Okay, allow me to answer that. Very roughly, the proportion will be about the same as 2021, perhaps slightly larger in terms of revenues. Cement, the construction materials business by nature have larger numbers, but education is fast catching up in terms of its growth, and we expect its profitability to improve further in 2022 and going forward.
Thank you, Mr. Brion. Speaking of schools, we have an advanced question here about schools. How have your schools adapted to the restrictions put in place during the pandemic? And is it everything going back to normal now?
Well, we knew that our students really could not do online learning. So the way we actually responded to the fact that the students were locked down and couldn't go to school was really to provide hard copy modular systems. And we actually were able to transition our system very quickly when we, and so that we were able to continue to offer classes. We do provide internet-based support through Facebook Messenger or through Facebook groups to make sure our students are on track with their modules and that they have the right support from teachers. But essentially, they're doing it remotely via hard copy modules. Now, we distribute our modules for the entire semester at the very beginning. So unlike the government schools and basic education that give these modules sometimes weekly or semi-monthly, we actually give it everything so that the students don't need to come back and pick up the schools. Now, even starting late this year, the CHED and local governments have already allowed some limited face-to-face classes, especially for laboratories in certain degree programs. We believe this will continue through next year, that there will be limited face-to-face. We're actually planning for a blended system as we enter the new school year. But our system is actually set up. What we built into the system is flexibility and agility, so that if there's another lockdown or if there's a variation within one province, there could be a variation of lockdowns, that we can respond to the system by providing a mix of blended or completely remote systems.
Okay, thank you, Mr. Salazar. I think it's really great how you're very thoughtful of the situation of your students. So, speaking of enrollment figures, are you expecting another surge in school enrollment figures this 2022-2023 school year?
Yes, actually, we're right now projecting another growth of about 30% overall in the system. So we're actually targeting about 124,000 students, up from 94,000 students this year in the Philippines alone. And right now, at this early stage on our enrollment figures, the indications are strong that we will hit our targets of 124,000.
30%, that's very impressive. I'll just focus first on the advanced questions for education. So there's a question here, what is the average class size of your school?
Well, because of the requirements of CHED, the average class size will have to be brought down to about 25 per class, physical class. You know, prior to this, our average class size was 50. So people don't need to worry that we have these huge, overly large classrooms. We're about 50, but now because of the CHED requirements, we're bringing it down to about 25. But there will be some sort of a shifting system going through our school so that the kids can rotate in and out of the classrooms.
Okay, thank you. So there's a live question here from Jomo Philart. Can you give more color on the margin profile of the education group? Specifically, how does Finma maintain its margins in low-cost education?
Well, our average EBITDAs throughout our school systems is about hover between 35 to 40%, while our net margins hover at about 25%. So that's the profile. Now, how do we achieve this? Well, from the very start, we actually implemented a system that's familiar to our hospitality, our sister company in hospitality, which is a no-frills, bare-bones system. We've eliminated what we call the non-essentials in our system, in education, focusing on the most important things, which is really be a well-paid teachers. Our teachers are actually well-paid in our areas and very competitive salaries. Also focusing on just the right amount of facilities needed to pursue an education. We've removed many of the things that we don't think is necessary to help our kids achieve their goals of passing the board or getting a good job. So this is we'd like to say that one of the most expensive non-contributory costs in education is a heavy administration. So we actually have a very lean administration in many of our schools. In actually all of our schools, there's only one full-time president, with all of the backroom administrations of finance, IT, marketing, really being centralized and managed for the entire system. This allows us to keep our costs low. And so that's essentially how we achieve these margins. And the volume also, of course, also helps.
So I guess it's a combination of volume and cost management. Okay.
Yes.
So we have a question here from our chairman. How does the education business plan to grow at 30% organically without hitting the usual capacity constraints that other universities encounter?
It's actually a mix. Thank you, Mr. Chairman. It's actually a mix of two things. One, we did project a lot of this growth for the past. Our projections always go at a 5-year, revolving 5-year. So we know what our capacity needs are moving forward. So in some cases, like in the University of Pangasinan, in Arroyo University, in Southwestern, we've actually built more capacity. We've actually did build more buildings. But beyond that, we're a little bit fortunate because the rules of CHED are actually limiting classes to 25. So this will force a shifting system. And because it's a blended system, not 100% of the kids will never be on campus at the same time. Right now, we're looking at a blended system about what we call 2-4, where in a 6-day school week, they will spend 2 days in campus and the 4 days remotely or in distance. So this allows us essentially only about 1/3 of the students will be on campus at any one point in time. Now, this remote learning system has actually been beneficial for our students because it has reduced the cost of education. It has reduced transportation. It has reduced things like baon or other costs. So actually, we estimate this has brought down the cost of education from about 1,000 to 1,500 a month for our market, which is actually good for them because they're very, very cost sensitive.
Okay, thank you. I think we have one last question on the education side, at least for the advanced questions. We'll see if there are any live questions later. Phinma Education has been acquiring schools over the past few years. How were these acquisitions funded, and how do you plan to fund future school expansions?
The funding has been a mix of equity, especially for the first 4 schools. It was driven largely by equity investments from the Phinma Corporation. But our largest acquisition, which was Southwestern, really was driven by debt. By that time, the network had developed enough capacity to borrow money to actually purchase Southwestern. And in moving forward, in about 2019 and 20, there were investors that came into Phinma Education. I think 3 investors: ADB, FMO, the Dutch development bank, and Kaizen, a private equity firm that specializes in education, actually invested up to about 20%. So they now actually own a 20% stake. The money that they have brought in has been used for subsequent acquisitions, and also to fund some of our expansions, the purchase of land, etc. But in some schools, as many of our schools actually have the capacity for debt, and so they've actually been using debt also to build new buildings as well. So it's been a mix of equity and debt through these 17 years.
I see. Can you maybe shed some color on the exact mix of that equity?
At the mother company of Phinma Education itself, our debt is at about 3 billion, as opposed to our our total is about 5 to 6 billion.
Okay, I see. Thank you. So moving on to some more general questions. There's a live question here from Basit Lakay. Now that Phinma is making lots of money, how do you plan to use this extremely large earnings? And also, what specific drivers brought about this large 2021 growth? So I guess I would like to add to that one advanced question. Do you have any CapEx guidance for 2022? I believe that these two questions can be answered together.
I will speak for education, and then maybe Sir Ed can also speak for Cement on how they plan to use any CapEx guidelines. And then I don't know if maybe Bith can also contribute to the overall strategy of the group. But for education, actually, our income really has been, the directions actually of the board have been, is to really invest, well, besides our continued expansions, especially in terms of capacity. I think our board actually did provide us also directions that we need to, but we should also focus heavily on investments in our people. So we are accelerating actually our improvements in salaries and compensation in order to continue to remain competitive in this space, to continue to make sure we get the right people and the right teachers, and to continue to develop our faculty. I think this is important as we move forward. Now, in terms of CapEx guidelines, the general guideline, we try to avoid spending more greater than our depreciation cost, so we don't eat into much into our cash. However, especially in times of expansion, where there's a need for more capacity or where there's an opportunity that's available, we do exceed that, and it's really driven by the opportunity. Sir Ed?
For constructions, we're looking at maybe around 5 billion pesos in the next 3 years for our expansion. As you know, especially the cement industry, the local players have not expanded that much over the last 5 years ago. So there is really room for local players like ours to expand our capacity. Even this year, we're increasing by 50% our capacity in Maribeles. And soon we will have to put another one in Davao and another one in some other areas. We also, on our steel business, we're also putting up a separate business for insulated panel, which will be coming also maybe in the next 2 years. And our light metal frame will also need some investment. So at least the construction materials industry division of Phinma is looking at more growth than where it is today.
Allow me to add also that as a matter of principle, earnings are geared more for investment, especially this time when the growth momentum is very, very significant. Of course, we will maintain our commitment to pay dividends to our shareholders. At this point, I'd like to ask Pete and Mary to also speak about their plans, because even in these two segments, there are investments that are being planned.
We're thinking of joint projects with Phinma Properties to gear some of our projects into tourism-related developments, either somewhere in the north and also in the Visayas. So there are exciting opportunities that we're looking at. One to start with is in La Union, already a property owned by the group, and we are looking at a mixed level of condominiums and or condotel type of arrangements. But we are continually looking at opportunities either on a joint venture basis or on a, as I said earlier, franchise basis, but also for the group to spend on looking at virgin properties, probably in the Palawan area and other areas. Maybe you'd like to touch on to some of the others, Pete.
Okay. I'd like to confirm what Mari said about doing joint venture projects with hospitality in the tourism space. But still, all of these are really townships, whether they are commercial based or tourist anchored. They are still township projects, and the hospitality segment is very complementary, regardless of which way we go. So our expansion is to buy more properties or go into joint venture with more property owners in the regions. As I mentioned earlier today, to a large extent, all our projects have been in the NCR, but we would like to take advantage of the regional developments, and I think really, and you probably all agree with me that that's where the growth is, rather than the saturated market that the NCR is already. So that is right now we're looking at Bacolod, Union. We're also looking to expand outside Cebu City within the province. Looking at other projects in Batangas as well. Recently, hospitality and housing went together to inspect a property in Lipa, and we are already very close by because we just launched a project early this year in San Jose, Batangas, which is the next town to Lipa City. So there.
Okay, if that is all, thank you. That was a very comprehensive answer, but there is still a follow-up question from the same person who asked that. Follow-up on the earnings reinvestment. What payout ratio do you intend to maintain? I assume he's talking about dividends. Are we aiming for a certain percentage of dividend payout?
The unwritten policy, if I may answer that, is to maintain for the moment a cash dividend of 40 centavos per share. And therefore, as much of what we need to invest to support the growth, we will have to consider that. In fact, we also are looking at being able to raise equity to support all the growth plans of all the subsidiaries.
I see. Thank you, Mr. Brion. We have one question again for education. Hang on. This is coming from someone you might know. This is from Mr. Bert Santos. What are the major courses offered by Phinma Education?
We have the usual traditional courses of nursing, which is a growth area now. The health sciences, BSBA, and IT. But another big program in our network is criminology, which is the pathway for many of the low-income students to enter the police force or similar agencies, similar organizations. So these would be the big programs. But depending on the course, there would be other things. We do have a medicine program in one of our universities. Psychology is a big program. But these four will probably be the bulk of our students.
I see. Thank you, Mr. Salazar. Actually, it's now 5:30. We were scheduled to end at this time, but I hope you don't mind if we extend. Is it okay, gentlemen? Because there's a lot more questions. Is it okay if we extend a bit? Okay.
I think we are fine. Yeah.
All right. Thank you. So going on to some advanced questions again. For construction materials, can you shed some color on the imposition of tariffs on imported cement? How has this affected your profit margins?
Well, it does. But that tariff will end by October this year, because that's its third year. But it's still, we are actually in the CTA arguing that that tariff is actually not legal at all, based on the evidence that we have submitted. So we're still in the Court of Appeals, but it will end in October.
Oh, okay. So you think that it will end in October despite the protest? I think I read something about the protest from the Cement Manufacturers Association of the Philippines. I think they wanted to extend it, but
they would. But I think, from my perspective, kind of be late already because in the end, the new administration will be coming in by June, I suppose. And before you have a DTI secretary, that will be probably beyond October.
Okay, actually that makes sense. Okay, so for construction again, how has rising cost of power and other raw input materials affected your construction materials business? Are there any cost mitigation strategies in place to protect margins?
I think for steel cement, there are quite a lot that we have. For example, when the supply chain became an issue, our risk mitigation program kind of working for us because, for example, for the ships that we actually get, we have contracted those for 3, minimum of 1 year. And these are big ships, they are not small ships. We're the only one in the industry capable of receiving, say, 50,000 Panamax-sized vessel, which actually reduces our cost significantly lower than smaller ships. The other thing is we have a large partner in Vietnam, also very reliable. And managed to increase prices, relatively speaking, compared to others, as customer have experienced that our quality is much better than others. And so they allow us to charge premium and successfully increase prices this year after the Ukraine-Russian war. So those are the things that we actually have put in place to address the issue of increasing energy costs, supply chain problem, and so on.
Okay, thank you, Mr. Sahagun. There are actually multiple questions about the liquidity of Phinma Corporation. A lot of our audience are expressing that they find it attractive. They like the company, but there are some liquidity issues and they have trouble maybe trading the stock. Do we have any plans to address that issue?
We recognize that problem and we are doing something about it. Certain plans will be rolled out as they get approved in the coming weeks and months.
Okay, I take it it's not yet something that you can disclose, Mr. Brion?
Not yet.
Okay, thank you. So, secret daw muna.
But this will be addressed and we hope to satisfy all our investors who have been waiting for that moment to be able to trade the stock quite efficiently.
Okay, that would be great because it's such a waste that, there's not enough liquidity and a lot of people seem to be interested. Okay. What else? Do we have any? Did I miss any live questions? If I missed any of the live questions, would you mind sending it again to the chat in case it got buried under the chat? Okay. Regarding capacity, I guess this is for education. Given your recent investments and expansion, around how many more students can you accommodate without requiring a significant deployment of capital?
We can probably go up to, my guess, it's probably the next year or so. We in terms of not significant, so that will probably take us to about 150,000 students. But I think as our 5-year goals are showing a pathway to 300,000 students, I think we will need to start building up over the next few years. But I think our present facilities, we can, and with some investment, but not too significant, will probably take us to about the next 2 years, so about 150,000.
I see. Thank you, Mr. Salazar. So there is a question again here in the chat. It's follow-up question regarding your enrollees during the pandemic. It just seems counterintuitive that during a difficult condition, our D&E market still prioritized education. What would you say is the reason for the surge in enrollees?
Well, I think at its very basic, fundamental, the answer is it really is the desire of every Filipino to continue studying. I think every single Filipino family wants to see at least one of their kids graduate with a university degree, and that is, I think, something that exists all throughout time, and they will find a way. Kumbaga nga sa Pilipinas, ibebenta na nila yung kaisa-isang kalabaw nila para lang makapag-aral yung kanilang anak, no? So that's, I think, the most fundamental reason why people will continue to study. There was a lot of fear in 2020. As a matter of fact, we think about 20% of the students actually stopped studying, even though we did start classes around September, October of 2020 during the pandemic. But these kids, as soon as the pandemic regularized a little bit, not regularized, but kind of like got a little bit better, the students came back, and this actually accounted for our enrollment in 2021. About 20% to 30% of our new students were students who actually returned, meaning stopped studying for a year and then continued. So they graduated in 2020, stopped for a year and then continued. So that is actually proof that students want to continue, families want to continue to send their kids, and they would do a lot, almost anything to continue studying. And I think this is to a large degree the basis of our optimism for the future. That the Filipino family, and not just the Filipino family, we're finding the same kind of demand and desire in Indonesia, want to send their kids to university. There are just other constraints that limit them. And if we can find ways to overcome these constraints, then we can continue to grow and continue to serve this underserved market.
Okay, I'm sure you can overcome that, Mr. Salazar. Speaking of graduation, can you give us a breakdown of how many students are enrolled this year and how many are graduating?
So we have 94,000 students enrolled this year, and so roughly we would expect probably about 10% of that to be graduating. About 9,000 to 12,000 would be graduating. That there is a pyramid because the bulk of our students would be freshmen and sophomores, and as it gets more challenging as you rise up, there is some loss of students. So it's not exactly 25%, and that's another of our challenges. So you'll probably see not just 10%, maybe about 15% to 20% graduating. So that's maybe about 15 to 17,000 graduating this year.
Okay, but there are a lot more incoming, right?
Yes.
All right. Okay, so we have another question. Well, actually, this one is partially also my question. For the hospitality side, how is our capacity now that, we're starting to see some revenge travel? Are we back at full capacity, pre-pandemic capacity?
No, not at the moment. We're far from pre-pandemic capacity. There's a lot more room. That's why early on I invited everybody to go and see their destinations, especially those destinations that require flights. Those are our limitations. We are very much dependent on them. However, here in Luzon, where there is a destinations that are within driving distance, those are the ones that are enjoying good capacities, good occupancies. Even the one as far as Baguio, and even the one in San Fernando, Pampanga, we're doing quite well. And even the golf destinations, we have 3 golf destinations in Cavite, Laguna area. Those are the ones that are good destinations for the revenge travel.
I see. Thank you. Okay, so I guess I have a couple of more questions here for construction materials. It was mentioned that CMG was operating near capacity in 2021. How does the company plan to increase capacity moving forward? I think this was addressed during the presentation. If you could just refresh your memories, Mr. Sahagun.
Yeah, in fact, we're adding more silos this year, and then we're also putting up another plant and terminal in Davao sooner. So those are the plans that we have for expanding our capacity.
Okay, thank you. We have another live question texted to me. What has been your marketing strategy, if any, to attract and convince students to enroll? Are there any psychological barriers with the families thinking that they cannot afford them?
Well, actually, our marketing strategy has focused on really bringing to the students themselves, either during pre-pandemic, going school to school, and or now during the pandemic, of really aggressively hitting social media. So we do have a very strong social media campaign. It's very message disciplined. Now, the first at that instance of trying to decide whether to continue and where to go right after senior high school, the biggest obstacle they see in their mind really is the cost. So we directly discuss our costs. We actually in many of our schools locations, we actually put the price of how much it'll cost to enroll in our schools in our advertisements. The other thing is because we actually follow a socialized tuition fee scheme. Again, we're taking a learning from our sister company in hospitality. We have what is a rack rate, but then we have socialized systems. We do allow students, in other words, depending on their income level, we will give a 50% scholarship, and during these hard times, we even gone as high as a 75% scholarship. And a 75% scholarship still produces a positive gross margin. So that's how low our direct costs are, so that for us, it's still okay to offer scholarships as high as 75%. So actually at the 75% level, our tuition fee can go as low as even lower than $200 a semester, or 10,000 pesos. It can go even lower than 10,000 pesos per semester. I think it will go low as 8,000 pesos per semester. So we advertise the scholarships, which then projects and really shows to the market how accessible we really are. So that really is heavy. And of course, we must advertise, and we do advertise, including our marketing messaging, the quality results. So that's the board passing rates, our top notchers, and where our students are employed, our successful alumni. This all forms part of a value for money marketing driven strategy.
Okay, thank you, Mr. Salazar. It seems you are the favorite of our audience. We keep getting education questions. Although this next question is for construction. Do you have clients who have long-term contracts to purchase galvanized steel and other construction materials?
Mostly of our galvanized steel are short-term contract. I think the longest could be around three months, especially for projects. For construction, for cement, we do have some client last year that goes like 1 year, like SM, Megawide. But this year, we limited that to 6 months.
I see. Thank you, Mr. Sahagun. Okay, so we're almost out of questions and we're almost out of time. And I'm sure you guys are tired already. So maybe we'll be down to our last 1 or 2 questions. So here we have something. Can you enlighten us on your solar business? How promising is it in terms of value creation?
I think when you look at our business, we have been into roofing business for 56 years. And when you look at a lot of those that goes into solar, they do solar farm. Nothing wrong with that, except that as you see, the country is an island. We also believe that by putting solar farm, you have to convert agricultural land into power or solar farm. And that in itself may be a little bit problematic in terms of sustainability. God will not create additional land for the country, and food security is very important. So our emphasis is really go into roofing rather than farm, because there's a lot of vacant roof, idle roof. It's not productive, but we can make that productive by putting solar energy to it. So that's where we are different than others. And when you look at the number of roofs available in the country, you have so much roof available. And if you make it affordable for these people, you can actually see the potential growth of this business. That's basically how we do it.
I completely agree that we should not have to sacrifice food security for renewable energy. So thank you for that, Mr. Sahagun. Okay, I think we're down to our last question, unless somebody will make habol in the chat. But our last question is, how diversified is UGC's client or customer base? How much of your sales is accounted for by your biggest client? So I guess, do we have any concentration risk on the side of UGC?
For UGC, it's all retail and user, very focused. And that's where the synergy in the CMG coming from. These are not accessible for some integrated cement plant, and we manage to access them nationwide. So that's one of the strengths, actually.
I see. Okay, thank you. I guess that's it for the questions. Nothing is coming in anymore. So if maybe, may I call on someone from your team for some closing remarks before we end our webinar, our earnings call?
I can speak for the group, Sir RR, unless you wish to say some closing remarks.
No, go ahead, Chito. Well, if I may, let me just say thank you very much to AB Capital for hosting this. It's nice to see our old friends from AB Capital. It's sort of like a homecoming, as far as I'm concerned, to a certain extent. I see some familiar names still. Of course, Bert Santos and is a very old name that we've been together for so many years. And it's also nice to see Anton Periquet taking over and playing a major role in AB Capital. Maybe just one last word about the group. We're very much on an expansion mode. And I think one of the key reasons for our success in our various businesses, but probably most pronounced in education, is this concept of value for money. That people have come to realize that when they come to Phinma, they get good value for the money that they put out, particularly for schools where you really find families sacrificing significantly so that, as Chito put it earlier, at least one member of their family completes a college education. You want that college education to mean something. You want it to lead to a job. And I think that's very much what we're focused on trying to provide. Education that will equip our kids who come to our schools with the skills and competencies that they need so that they can have sustainable jobs, so that they can improve the lives, not only of themselves, but of their families, and they become very productive citizens. So these are the underlying themes of the businesses we're in, and we're very much in a growth mode, and we appreciate the interest that you're taking in our businesses. So thank you very much. I'll pass it back to Chito.
I actually don't think I can add anything more to that, other than I think what both Mr. Del Rosario and Mr. Brion said. I think what is our strength is that we are doing well by doing good. And I think that's something we wish to continue moving forward, that we believe as we continue to do good, we will also continue to do well.
Thank you, Sir RRR and Mr. Chito. So I agree. I think a lot of our senior officers are very nostalgic of the Phinma offices in Rockwell. I hope at someday we can arrange a visit for AB Cap.
Oh, absolutely, absolutely.
A lot of our senior officers miss the offices there.
Absolutely, sure.
But yes, it's truly admirable how Phinma has pivoted this business to not only make profits, but also to help build the nation, while at the same time improving the lives of the most underserved sectors of our community. Yun nga, Mr. Del Rosario said something just now that stuck with me. We must do good while doing well. And I must say you truly did good and did well this year. So congratulations. And again, thank you for joining us for this earnings call. I've been your host, Ian Garcia. And thank you everyone from our friends in Phinma. And I hope you will email more questions if you have any. Flashing there are the contacts of Phinma, or you can email it to AB Capital. And I hope you will join us again in our future earnings calls. And again, thank you to everyone who attended, the speakers. And goodbye, everybody.
Thank you. Thank you very
Thank
much.
Thank you. Thank you.